Welcome to Beyond the Balance Sheet, the podcast where we go beyond numbers to tell the real stories behind money. Every financial decision you make carries a story, a dream, a lesson, and sometimes even a struggle. Here, we explore the choices that shape lives, the emotions tied to wealth, and the insights that lead to success.
Hi there, my name is Christopher Nyalwal, and you welcome back to Beyond the Balance Sheet podcast. I know it's been a while, we've been away for some time, but hey, we are back. We are doing things much better right now. We are looking to have even bigger stories than those that we have already covered so far. And yeah, it's good to see you guys once again. And what we like to remind people that Beyond the Balance Sheet goes beyond the surface level discussions. We go deep into the mindset matters. We look at behavioral patterns. We look at what are some of the industry factors that are affecting each and every one of us. And I'm so excited about today's episode. We're gonna be diving deep into businesses and small scale, large scale, all types of businesses and funding for those particular businesses. Now, if you are an entrepreneur, I would advise you to come closer, get your coffee, sit uninterrupted, and just tune in to what we're going to be discussing about, because we want to touch on businesses that are serving the unserved communities, businesses that are looking to scale up, and maybe the missing link is funding, or maybe not. Joining me for this conversation is an amazing lady from Grassroots Business Fund. She is the CEO of the Africa region. Her name is Lilian Mramba, and she'll be joining us. And a big shout out to them as well, because they are the ones, sponsoring this episode that we are bringing to you today. So I'm really excited about that. So, hey, Lilian.
Hi, Chris.
Welcome to the, Beyond the Balance Sheet podcast.
It's good to be here. Thanks for having me.
Yeah, I'm really excited about this conversation. But before we dive in, maybe just tell us something about yourself. What are you passionate about in your life right now?
Outside of work, of course.
Yes, outside of work.
Yeah, so I'm a self-ascribed runner. I like to run.
Oh, really?
So I probably say I'm just coming out of a running block. I did a marathon and of course Standard Chartered. You can't miss that.
Oh, come on. Like they say, of course.
Of course.
Not all of us do
As
those
one
marathons.
does. So now I'm a bit I'm entering December mode.
Mm-hmm.
But otherwise, that's probably my number one thing that I like to do, just to
Run.
outside of work.
Okay.
Yeah.
So we can safely say you're a person who's driven.
We can safely say that, yeah.
All right. Okay. So in this space of business, how did you end up in this space? Maybe tell us a bit about your journey and how you ended up at Grassroots Business Fund.
Yeah. So I joined GBF 15 years ago. I had studied and started my early career in the US.
Mm-hmm.
I was working as an auditor. But I was really far away from home. I was on the western side of the United States. Okay. And it's literally day and night. When it's morning time, it's nighttime here, and vice versa. And after a while, as much as I love auditing, but after a while, it just felt like it was a really big sacrifice for the kind of work that I was doing. And I think I was really just yearning to have more impact in my work or through my work. So I decided, actually in the middle of the financial crisis, I quit my job against advice of many. As people were being fired in Wall Street, I quit my job to go back to school to get a master's. And while I was there, through career counseling, somebody told me about this new emerging space called impact investment, which basically, it's borrowing private sector commercial discipline of investing, but sort of layering on this impact development angle. And that really spoke to me because I wanted to have impact, but I really liked sort of having started in the private sector, having that commercial discipline. So I learned about the space, and GBF happened to have an opening in Nairobi as I was graduating, so I
great
moved
timing.
back. Yeah, great timing to move back. Yeah, exactly. Yeah.
You've mentioned something there called impact investing. Maybe just expound on that, because most of us just think about investing.
Right.
Yeah. What do you mean by impact investing?
So impact investing is a broad field of investment where we're looking for a dual purpose. Some people call it sort of a double bottom line.
Okay.
So in addition to investing to generate financial returns for ourselves and our investors, we're also investing to generate societal returns or impact returns. And in our case, we have to create both impact and financial returns at the same time. So not one is prioritized over the other. We actually seek to do both at the same time.
Wow, that's really cool. So could you tell us who then is your typical person that you approach in terms of funding then?
Yeah, the person that funds us or the person that we fund?
The person that you fund now.
The organizations that fund us, there are many different types, but I would say these are organizations that some of them look at impact investing as a way to extend their otherwise philanthropic or charitable dollars or shillings. Because if you think about traditional philanthropy and charity, once you give it, it's sort of gone.
Yeah.
But with impact investing, because we are generating a return, there's a bigger chance for sustainability there. So we kind of say, yes, you can do charitable work and you'll create a lot of impact, but through impact investing lens, then you're also able to have a bit more sustainability. Your dollars stretch further. Yeah.
So we talked a bit offline, we're having this discussion, and you talk about the people who you fund must be serving a particular community.
Yeah.
Maybe you could just share about that a bit.
Yeah. So that's really our angle, and I would say that the impact investment field is quite vast, and it's really grown. When I first came into the space, there's a handful of investors in the market. Now there's probably 50 plus, maybe 100, maybe more, right?
Including corporates.
Including corporates
yes.
that are doing impact investing, which is fantastic because we need all these players. The gap is so big.
Yeah.
And everyone sort of defines impact in their own very specific way. In our case, our mission is poverty alleviation.
Okay.
Now, philosophically, we believe that the way to do this sustainably is through working with private enterprises, through small businesses.
Okay.
Because we know that there's certain small businesses that are working in underserved communities or low-income communities. They are creating jobs. They are buying things from smallholder farmers, working with artisans in handicraft. They are creating essential services, affordable healthcare, education. And we believe that by supporting these businesses to grow sustainably, we actually can now uplift the communities that sort of they interact with. So we want poverty alleviation. We want to see incomes being increased, and we believe that the way to do that is by supporting businesses that are doing that. Yeah.
Okay. So you've mentioned sustainable, because there are many businesses that start simply just to make a buck. So how do you sift through the ones that don't look sustainable or don't look like they'll survive or don't look like they'll have the desired impact from the ones that you actually believe could have an impact, and then you are able to put in more advisory and input in those business? How do you sift through those? Maybe what's your criteria? I think. I don't know.
Yeah, so maybe one thing to elaborate is we're lenders.
Okay.
So we don't invest in startups. And that's a lesson that we have learned. School fees were paid. So we know that because we provide debt and debt products, we need to support businesses that are already generating some kind of cash flow because we need to get repaid. So that's sort of one thing to distinguish. We're not looking at potential. We're looking at sort of adding rocket fuel in businesses that are already sort of in the market. We've seen traction, and they're actually creating some operating profits.
Okay.
Beyond that is then looking at, so we're not just dealing with founders. These are small businesses. A lot of them are privately held, owner-operated, but they have small management team, maybe one or two people. That's enough. So we're looking for a strong management team.
Okay.
We know beyond capital, some of the challenges in companies, especially small businesses, in receiving capital is the fact that they have some let's just call them institutional strengthening that needs to happen. System strengthening, formalization.
Yeah.
So beyond having a strong management team, we actually want a team that has the capacity to change. So I was really interested in, you're interested in behavioral economics,
yes, yeah.
because what keeps the difference between a small business that stays small and the one that grows is really the ability of the entrepreneur and the management team to be able to adapt, evolve, change, and to really have that capacity for change. It's not in it for everyone. And because our model is we give you flexible capital, but we also give you management support, through our not-for-profit. And we think you need both. So if we came across a team that only wants money and they don't want to listen to our advice and advisors, that's probably not the right fit for us.
Okay.
Because we think you need to be able to, yes, take in the money, but also take in advice in order to get the business to the next level.
There's a hustler mentality, and there's the CEO mentality, and I think you've touched on it a bit, because not everyone wants to grow, not everyone wants to adapt, not everyone wants to change as the times are changing.
Yes.
So what do you do in terms of changing this mentality? Like, you can identify that this business actually has a potential. It checks all your boxes.
Yeah.
But now in your advisory, how do you go about changing this mentality? Because I've realized having the hustler mentality, we are wired to do 3, 4, 5 things hustling, but not building systems that can enable whatever you're building to grow beyond that. So how do you guys look at that?
And by the way, I should say there's nothing wrong with a business that wants to stay small.
Yeah.
I don't think everyone should be forced to have a certain path in terms of scaling. If you have a small business that pays the rent, pays school fees, pays for medical expenses, and you're happy. You're not stressed, don't add stress.
Good for you.
Don't add stress in this person's life.
Not everyone has to be a multi.
Not everybody has to be running, conglomerates.
Yes.
And I think that's fine. But because of that, then you have to say, well, what is the right kind of, is this business appropriate for a debt-like product? Should you be borrowing if the intention is to stay small, or should you then find ways to fund the business through internally generated cash? So we're not saying that, if you're running a small business, they call them lifestyle businesses, which maybe is a bit patronizing, but if you're running a small business, then you don't have an intention to scale rapidly, well, maybe you don't need to really borrow outside capital. If you're borrowing outside capital, I think the presumption is in order for you to afford that, because it comes at a cost. It's not free. There's interest. If it's equity investors want returns. Then you have to really have that drive to really grow and expand your business, because that's how you're going to afford this external capital. Yeah.
I like the angle that you're bringing, that sometimes it's not only debt that is going to solve your problems.
Yeah.
There are other ways to raise capital. But in your experience, what are some of the challenges that some of those businesses are having? Maybe they desire to scale, but what are some of the issues you've seen in those businesses that maybe need to be addressed?
Yeah, I think a lot of it has to do with just formalization of the business, running things with proper structure.
Okay.
And also, one thing that we really try and instill in our companies is to seek advice. Yeah. I'm not talking about setting up fancy boards, nobody got time for that. Not always. It could literally be having like 1 or 2 people that you really trust, respected business people in your community that have run successful businesses that you meet with on a regular basis, just to have an outside perspective.
Okay.
And then having that now desire and the capability to actually take in advice and make sometimes very difficult changes in your business if you want to take it to the next level. Yeah.
Okay, so do you have any stories of experiences, in your journey of working with these small businesses? Maybe could you share maybe a success story and maybe one not so. What was it so successful?
Yeah, I was gonna say we have many stories. I think all investors, if you've been in the market long enough, everybody has battle stories.
Yeah.
I think one of the businesses that we're really proud of here in Kenya, we've invested in sort of a company that is sort of the leading manufacturer of coconut-based products. You know, they work with farmers on the coast. Okay. They source the coconuts from them. There's a factory that they've built on the coast. They're employing people. And we probably interact with, maybe you even know who I'm talking about. We interact with this product and, you know, we see them in our supermarkets. Yeah. And we also worked with them to find ways to miniaturize their products so that they can be available at smaller quantities and smaller unit costs. So they can be widely available beyond sort of the middle and upper class segments that shop in supermarkets. And I think this business sort of exemplifies the kind of companies that we want to support, because a lot of us may go to the coast on vacation, but if you've been there and you know that there isn't a lot of economic opportunities available if you're a smallholder farmer in Diani somewhere with a small plot of coconut trees. You know, you're selling your coconuts maybe to the local broker. It's going to end up in a resort, maybe in a form of milk or water. But what really other opportunities do you have? There's not a lot of crops that you can grow along the coast. So to have this business that's Kenyan-based, that's actually creating a real opportunity for these farmers to uplift themselves. You know, they're providing new seedlings, new varieties. Coconuts trees have, you know, they're quite old. And I didn't even know actually coconut trees, you think they're very hardy, but they're also actually quite sensitive to drought and changes in weather patterns. So this company is coming in, is teaching the farmers about climate resilience practices and bringing in new seedlings. And, you know, we're exporting this coconut oil into markets abroad. And I think it's an example of how private enterprise, and this is a for-profit driven company that actually can have a real meaningful impact in the community.
Wow.
Yeah.
So I can imagine even the numbers of people who, you know, the business started with and how they are now must have really expanded in terms of offering employment to people.
Yes, exactly.
Oh, wow.
Yeah.
All right. What about the...
I know.
I'm really waiting for this one.
What about the one that didn't really work out?
Yeah.
No, we definitely have learned lessons. Maybe what I would say instead of calling out specific example, a lot of our investments are in the agriculture sector. So we invest in agro-processors, and probably one of our toughest example was in Mozambique. It's a very difficult country to operate in. I think if you think about a country that has had a long history of sort of civil strife, we were trying to work with smallholder farmers, trying to introduce new products for them to cultivate. I think when you're in Kenya, we don't even realize just how much more exposed even our smallholder farmers are. We went into Mozambique, and actually it took a few seasons before the farmers actually trusted that somebody's going to come back and buy something from them, having that trading relationship with an enterprise. That wasn't there. This is now, again, probably 12, 13 years ago. So that business we had, and it was early stage, it was probably pre-revenue. We went in with very strong operators who were local operators, but we just completely underestimated how much of a lift it's going to be to start from where we are, given sort of the dynamics of sort of the farmers that we were working with, and to get to a point where this business is actually sustainable. And we also underestimated just how reluctant the local market is when it comes to funding businesses in the agri sector. So you're in, but you need additional capital to scale, because also you've underestimated your costs, but nobody's following you. There's not enough capital that's interested in the space, so you're kind of stuck because your business is cash strapped, and nobody else is willing to come in. Yeah.
Interesting, because now that brings on the question that I feel like there should be some local partners that then you work with who then are able to prepare the farmers, do that hand holding, because I feel you guys at your level, it's a bit hard to do hand holding for all the farmers. So what about working with local partners? How has that been for you? Do you have any experience working with local partners? And
Yeah, so we work. There's an ecosystem of local partners that we work with. Specifically on the training side, we prefer that the business that we work with is the one that actually interacts with the farmer, because we want to make sure that incentives are aligned. Okay. So most of our businesses, they themselves, and it's part of the reason why we support them, is they themselves have baked into their business model that they're going to have very strong relationships with the smallholder farmers. If you think about it, it's just supplier management, right? And having really tight relationship with your suppliers, because on the marketing side, you need them. So forget smallholder farmers, just if it was any other business model, this is about having very strong supplier relationships. So we like that. And we would favor a company that works with the farmers themselves, vis-a-vis one that sort of maybe plugs in other players to do the work to a large extent. However, a big part of our offering is the what we call technical assistance, which is management support. A lot of that we can do ourselves. If it has to do, for example, on specialized issues, we want to be compliant with NEMA certifications. You want to improve yield. You want to understand what other markets are outside that your company can access. We don't have that expertise in-house. So we will work with local partners who can come support our company. We'll basically bring them on to support our companies in achieving that. We work very closely with local associations. So we also like it when our businesses belong in associations like KEPSA, Kenya Association of Manufacturers. There's many, because those associations can also provide other wraparound sort of support. Certificate of origination, certain lobbying, additional training. So we work with them. Actually, a lot of our companies get referred in through our local partners. And then, of course, you can't forget the banks, who are an important player in the ecosystem. Ultimately, we're very small. We're a very small part of the pie. If you think of the entire sort of financial market, we still think banks are where the ultimate scale is, and microfinance, SACCOs. And so a big part of our success is we want to make sure that more and more businesses actually are able to raise capital after us, especially if they're able to raise that from banks. So that's a metric that we track very closely to say, after we've come in, we've provided you with this flexible debt, we've given you management support, you're able to grow. Can you actually raise additional capital from other more commercial players than us? And can you go back now and get a bigger loan? Can you get a longer term loan from a bank? We can't forget about banks. I think they're important.
Okay, so then that raises the question then, what amount of support are we talking about in terms of the debt, and is it for a fixed duration of time that you spend with a particular business?
So right now in Kenya, we're running a program called the Junior Growth Program, and through that program we're doing, I think the maximum loan size that we're doing is 14 million Kenya shilling. We're starting at about 500,000 Kenya shillings. It's a relatively short-term program. It's 5 years, so our loan maturities are not very much. They can be much longer than that. Ideally, we want to invest in 5 to 7 years. So we're in the process of putting together a vehicle in place that can actually be a follow-on of this program that can provide more longer-term funding.
So now you're offering debt. Do you also offer financial training to these businesses? How to manage their funds, how to comply with taxes, is that also part of what you do?
So we call that technical assistance. I guess it's a bit of an industry jargon. So on the Genua side, what we're doing actually before you even come and apply for a loan, you must have had some initial training. And it's just beyond financial literacy. It's cash flow management. It's other aspects of sort of business best practices. Once you have received the training, then you can come apply for a loan. Then you go through a whole diligence process. After you've received a loan, then we provide additional sort of mentorship and coaching, or post lending technical assistance, where we can help address general management issues and also see if there's sort of specific technical things that we need to support in the business. So training is a really huge component.
Yeah.
I would say before you even
before you receive any funds.
before you receive any funds,
Yeah.
and certainly after, it's almost like training on the job. It's one thing to sit in a classroom and someone tells you, this is how you build an Excel spreadsheet of cash flow management, and then you get the loan, you're like, what did I learn again in that class? So somebody has to come back and say, remember that spreadsheet we showed you?
Yes.
Give me your receipts, open your book. This is how you enter them. This is what that means. And in our outside of the program, sometimes this is a 2-year process. We come in, we give you a little bit of advice, we step out. Can you implement it? Do you need additional support? We come back in. So it's a sustained, very sort of customized approach in supporting the businesses in implementing some of these management best practices. It can't be done in a classroom style.
Yeah. On ground, on job training.
On the job training as you're doing it. Yeah. It's applying sort of very theoretical concept as you're running your business. Yeah,
because I'm asking that because one phenomenon that is really killing many of us is access to digital loans, mobile loans. And these things are accessible at the touch of a button. You don't have to wait in line for it. You don't have to present yourself, present your case. They're just, available.
Yes.
So then this then becomes an issue, because if somebody is able to access this digital funding,
so quickly,
why what do you guys offer that is different from other people who are offering funding as well? I just want to bring in that unique aspect.
I think there's space for sort of emergency type funding that you can get very quickly through digital loan products. What we're trying to address is really a different challenge. What we're trying to address is businesses that we know are highly deserving of long-term funding. And the reason why, and they may actually have access to short-term funding through a bank. A lot of our businesses already have overdraft facilities or shorter tenor loans. But for a business to think, let's say, 5 years out, and to be able to have a plan, I want to grow my business so that in 5 years, in 10 years, I'm going to list in the Nairobi Stock Exchange. You cannot think like that if you don't know where your money for those 5 years is coming from.
Yeah.
So that's the gap that actually we're trying to address.
Okay.
Is we want to get a business from point A to point D over a period of 5 to 7 years. In order for that to happen, we need to give this company the eyesight on that funding for the entire period, which then allows them to plan and execute of that plan. If you only have short-term funding, meaning I'm only funding you for this season, then why am I thinking about next season? I don't know where that money is going to come from. I'll think about next season when I have money for next season. So that's part of what keeps companies small. They can't think long-term unless they have long-term funding, and that's what we're trying to address. So it's a little bit separate from digital loans, because in those cases, we are really addressing short-term, sometimes even consumption needs. I have an emergency, I'm out of cash, I'm going to quickly get a loan so I can pay school fees, funeral expenses, things like that.
Okay. Now, I've noticed there's certain preference in terms of the businesses I look at, and I've noticed farmers keep popping up a lot. Do you have other businesses that are not offering, are not in the farming space, for example, small businesses that are offering other impact to other, the community, but are not necessarily through farming or something like that?
Yeah, we do. Now, the reason why farming keeps coming up, so we're impact investors. We say we want impact in underserved, rural, marginalized communities. What are the economic activities in those communities? So in Africa, ag is the biggest employer, right? And so part of the reason why we talk a lot about ag is because we're in ag-based economies.
So Africa has a lot of land. I guess many people have a piece of land where they can maybe plant something or try something out.
So that's and it aligns quite well with our impact thesis. I would say that probably our second biggest sector where we've supported is handicraft or artisanal manufacturing. people that are creating these baskets. Some
Okay.
of them are for export, some of them
All
domestic.
right. All
That's
right.
actually the second largest employer on the continent.
Okay.
And also a big part of our historical portfolio.
Mm-hmm.
And then I would say the third bucket for us is, like I said, essential services for these communities.
Mm-hmm.
Education, private healthcare. We've had renewable, people that are creating solar products, trying to solve the energy problem. That's, I would say, is a third bucket. Maybe I just don't have quick examples of the
but it's
top
good
of mind.
to know you have.
No, we do. Yeah, we do.
Other opportunities, because
Yeah.
I feel like a lot has happened in Africa. There's a lot of political unrest, and you'll find people moving out of their homes and resettling in new places, and not necessarily having the land, but they have their minds. They are wired entrepreneurs, and they would love to start things and see them grow. So it's
I think
good
if they're creating a product or a service or solving a problem in a different way, that in the end is providing a benefit in those communities, absolutely, we would fund them. They don't have to be in agri.
Okay, fantastic. That's good news. I hope somebody's taking
I hope
notes.
someone is listening.
I hope someone's listening.
Call me out.
Yes. Oh, wow. Okay. So let me see. So in Africa, you're in different countries. Do you know how many countries maybe you are in Africa?
So historically, we have we've been in East Africa, Kenya, Tanzania, Rwanda, Southern Zambia, Mozambique, Swaziland.
Wow.
Sierra Leone, Ghana. That's where our historical footprint. Right now, our work is concentrated in East Africa. But we want to scale and go back to the markets where we've been. But we have invested beyond East Africa, but for now, that's where we're focused.
So, in your opinion, analyzing the different people you've worked with in the different countries, what seems to be the common problem when it comes to this entrepreneurship and people looking to scale their businesses? Maybe economic, maybe support, maybe the institutions. What seems to be the...
Yeah, I mean, beyond what we've discussed, the capital and the institutional strengthening, I think, generally speaking, if you're a business that is operating in rural areas or communities, then the infrastructures are not fully developed. Just the basic infrastructure that you need your business to run on are not fully developed. So what we see is these businesses then almost have to. I mean, we've had a business that contemplated building a road to their factory because they were deep in the interior. It's not the job of a private enterprise to build roads, but if your trucks keep getting breaking down because and the accessibility isn't there, then all of a sudden it becomes a business problem to solve. So I'd say that's the challenge: is where these businesses are operating within areas where the infrastructure is not fully developed, which sometimes requires them to almost take a public sector role. And quite frankly, that's part of why we're here, is to say, okay, maybe that's why traditional lending models or pure commercial investors won't support this business, because it's incurring costs that should be borne by a public sector entity. So the commercial capital shies away, but that's where impact investors come in. Because again, we don't just have a commercial motivation, we have an impact motivation. So we'll step into spaces where commercial investors would shy off, maybe because of something like that.
Okay.
Yeah.
Well, okay, then as we're winding down, because I think there's so much that I would have loved to cover, but time is of the essence.
We're being yelled at.
All right. Maybe what advice would you give businesses out there in terms of placing themselves in raising the bar for themselves to be in places where they can be attractive to institutions like yourselves?
Yeah.
What do they need to do to get that visibility? Because I feel like sometimes we work hard, but in silence.
Yeah.
What are some of the things that we need to do then?
Yeah. And it's such in a bit of a mysterious space. Most of the companies that we support, honestly, probably haven't even heard of the term impact investing, right? So I totally understand that. I would say probably build networks. You know, start with peer networks within your communities and find ways to extend beyond that, which is the reason why we like sort of working through local associations and organizations to make sure that we are sourcing our sourcing is sort of far reaching. We're not just concentrating capital in major commercial hubs. And so it's really the impetus of entrepreneurs in those communities to make sure that they network. Join the local chamber of association. You know, they'll call you and say there's a funder coming into town to sort of expand your horizon, because I do appreciate that this is a very mysterious world of...
Yeah, because one thing we always complain about, people say, you know, there is funding available, but we're asking, where are they? I'm here. I'm wondering how to access them.
Yeah, that's like, I feel like that's a whole other podcast because there's so many nuances to that. It is investors missing the opportunities because of sort of mental modes that we have put in place of how we assess businesses. It could be, okay, there's actually risk issues that we need to address on the enterprise side, and who's the right person to address those. That's a whole other, that's another episode. We come back?
I think you need to come back for sure.
Yeah.
All right. So somebody needs to, have some good networks. Community-based organizations, a good place for somebody to be part of?
It could be CBOs, it could be your local chamber, it could be even someone like
Network, farmers associations, farmer chamas, all the boards, for example.
Just spread your networks, I think.
Spread your networks.
Start where you can with your peers, and then reach out. Yeah.
You'll reach out.
Yeah.
All right. Any final remarks for somebody who has had this interview?
Yeah.
They now know a bit about Grassroots Business Fund, and now they want to reach out. How can they get more information, and maybe how can they get in touch with you guys?
They can go on our LinkedIn page. Probably is the best place to start.
Okay.
We post, if we have calls for businesses that we're looking to support, we'll put it there. If there's jobs that we're hiring for, we'll put that on LinkedIn. They can visit our website. But I would say probably the best place is to interact with us on our socials. I feel like a Gen Z.
Socials, eh? maybe tell us your socials.
We don't have socials. We only have LinkedIn.
Oh, you only have LinkedIn. Okay, fine. So they need to be on LinkedIn.
Yeah. That's
they
actually
need
an
to
interesting
be on
point.
LinkedIn, yeah.
Oh, no.
Because that's where you grow your networks.
Yeah, actually, maybe join LinkedIn as well.
Yeah, we've talked about positioning.
Yeah,
so they need to position themselves also.
Yeah.
In that, you have physical offices?
We do have offices in Westlands.
In Westlands.
Yeah.
Okay, so they're a legit company.
We're not a briefcase operation.
No, sometimes when somebody says from Africa, and you're a CEO of Africa region. And so someone might think also they don't have a local presence.
Yeah. No,
and so it's good to know that you have a local presence.
Yeah.
All right, thank you so much, Lilian. I think this was good for part one.
We'll be back. Thank you.
Oh, please, we'll be happy to have you back and just dive deeper in some of those experiences that you've had. I know you've given us just top level experiences, but we'd be happy to, get some more depth into those. Yeah, thank you so much for your time.
Chris.
Thank you for gracing this episode and also sponsoring the episode. We are very gracious to GBF.
Oh, it's our pleasure. Thank you very much.
Okay, and to our listeners, I really hope you got some good nugget from there. I think many of us assume that funding is the only thing keeping you from scaling your business. But as you've heard from Lilian, it's not just about the capital. How are your systems? Do you have networks? Do you have a long-term plan? If you don't have any of these, then it's time that you started. Position yourself in places where you can also be recognized and noticed, and these opportunities can locate you. Thank you once again for joining us for this Beyond the Balance Sheet episode. My name is Christopher Nyalwal, and see you in our next episode. Bye-bye.
Beyond the Balance Sheet is where personal finance meets real impact. We shine a light on everyday Kenyans making extraordinary money moves, proving that financial growth is possible for everyone. Subscribe and join us as we rethink investing together.